Welcome to my weekly Forex video with Admiral Markets, Euro Dollar, taking a look at the break pullback continuation or BPC pattern. But first of all though, be aware that this video is shown to a global audience but may not be suitable for everyone. Therefore, please visit admiralmarketsglobal.com, select your country of residence and contact the appropriate entity for more details if it is suitable for you. Also, please note that trading for exchange and global financial markets is considered high risk. Please seek the advice of an independent financial advisor for more information on that. This webinar is or video is for informational and educational purposes only. By continuing watching this video, you agree with this disclaimer and you are aware of the risk involved when trading. Alright, let's kick off with the Euro Dollar. Euro Dollar broke on Thursday with the ECB rate decision. In fact, not the rate, but the quantitative easing was announced that it will continue, and that sent the Euro Dollar lower, the Euro in general, and also the Euro Dollar. And you can see that price broke below the 117 support zone that we talked about for a long time, and that price would have to break for more downside, or it could still be used for a bounce for upside if it were to break resistance, which it didn't. It didn't break the triangle to the upside, but to the downside. So the main target, in my view, is 115, which is the 38.2 fib off of a daily chart, whereas the 117 was a 23.6 fib. So that's the main target for this week. Of course, price could accelerate a little bit below that. 112.50 might be something to think about too if price breaks below 115. For the moment, 115 though is on my vision. But if it breaks below 138, then the 50 fib is the next bouncing spot. For the moment, I think the 38 could provide support for a potential bounce and make that might be the turning spot for more upside. Let's take a look at the 4-hour chart. So bearish at the moment. I'm looking for this correction to finish, maybe somewhere up in here, and then turn for that move down to 115. So I'm looking for bearish candlestick patterns at the weekly pivot point. I also have a fib on this particular swing from here to here. Excuse me. I'm looking for a turn at around the 38.50 fib for more downside. That's basically what I'm looking for. If price breaks through the support trend like this, then it depends on how it breaks. If it breaks and hits double bottom and then bounces quickly and does this, then it should expand further. However, if it breaks, shows a bear flag, yes, then an immediate follow through and continuation is indeed likely and possible. So that depends on how the the bear flag breaks and how it holds. For the moment, though, I'm waiting for price to move back towards the 38 and 50 fib resistance zone for more downside. Now, of course, more info on the Euro Dollar from Nenet today on Monday for myself, and Nenet again on Tuesday and Wednesday, and each day also real-time trading ideas, by the way. And Thursday we take a look, both of us, at the role of the US dollar in the global economy. So we step back and explain what's going on with the US dollar and what is our expectations for this particular currency in the near and long-term future. Okay, let's take a look at the pound dollar. Pound, from my point of view, my vision, is a bit messy at this moment. Yes, it is technically in a downtrend, and it is in a downtrend channel if you connect the highs like this and you connect these bottoms like this. However, if you compare it to this low, it still has not made a lower low. So it is choppy and corrective, and I think it really needs to break below 131, 130 before more downside is probably very likely. At this moment, it's making a strong upside. And I will be curious to see how price responds at resistance, which could be a potential turning spot if there are strong bearish candlestick patterns on the 4-hour chart, for instance. I might think about that. For the moment, this is pretty strong momentum. So I don't have any particular favorite trade setup at this moment. Maybe the R1 and maybe this break here. Of course, if it breaks above R1 and this top, yes, then there could be even a bullish breakout if it does this, bull flag, and then continue. So that is also even a potential for upside if it were to break above this channel. But otherwise, I am not a big fan of this pound dollar. It looks pretty choppy. It looks pretty rangy. Looking for a breakout, first of all, in my view. Next on the list, dollar yen basically is at a strong resistance spot, 114.50, 114.50, yes, indeed, 115. Let me show you why and where. Right here, these tops, all right, key levels, and of course, 115 is a psychological round level. We've got momentum to the upside though, and I think that there's a bit of divergence between these tops, plus the resistance zone plus the bearish candle. From my point of view, looking bearish, and I'll be looking for a break here of support. I should use blue, right? Break of support for a move down. Now, how far down? I would put a fib from here to here. Sorry. There we go. And we're looking for, well, basically any of these fibs could be bouncing spots, but I think the 38 will be probably, the 38.2 here will be probably the first serious bouncing spot. So price might make a small correction at the 23.6 fib, then continue to the 38, might make a bigger correction then at the 38, and then ultimately could get to the 50, 61, or 78.6 fib before bouncing up again. So it's a reversal potential here on the dollar yen. If I'm wrong, then price will break above the high, but still, I would need a break below support before I'm trading it anyhow. And if it breaks above resistance, I still don't think it's interesting to trade to the upside due to the strong resistance zone of 114.50 to 115. So I would not be looking that much for longs on the dollar yen. It would have to really, for me to trade it, I would have to see this week some strong bullish candle breaking above this zone, and I would rethink it and probably be okay with looking for a pullback and continuation. In that case, that would make sense. So that's something more for next week rather than this week. But from this week point of view, I think that the only really interesting thing is the potential reversal trade. All right, now it doesn't have to reverse. It could go sideways too, and that's something that could set up a breakout next week if it goes sideways. And for any bullish breakout, this Keltner is very important. Admiral Keltner indicator, a break above that would solidify on the weekly chart to a potential continuation. So if you're interested in that, check out admiralmarkets.com and go to Supreme Edition and download that. A lot of extra features, including this Admiral Pivot Points, Keltner, and 60 other plus features that belong to that upgrade of software. All right, more info, once again, admiralmarkets.com. Right here you get all the information to connect, and wish you all good trading. Cheers.